Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Hey, happy Monday, Coach Jay, and welcome back at the Buzzers. Hope you had a good day. Some volatility, and we'll see. Let us know how you did.
Let us know how you did in the chat. We just got an audio confirmation, video confirmation from Andrew. Thank you to Andrew. Welcome to all of our buzzer beaters. Welcome to At the Buzzer. If this is your first time here, I am Coach Jay. That is Coach Paul. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. This is our first time meeting. I am Coach Jay. I've been a Topstep Performance Coach since June of 2023, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I'm a performance coach here at Topstep. I've been here for a year and a half. I have 4 decades of experience in the futures markets. I'm here to share some of my experience and knowledge and hopefully help you improve or get over the hump and trade better.
Awesome. Thank you for that, Coach. Like Coach said, let us know how you did in the chat to start the week. Were you up on the day, down on the day? Maybe you didn't trade at all today. Coach, I was telling you, and we spoke about this a little bit last Friday, but getting some time away from the charts, and even though it was just a little bit of a long weekend for me, didn't pay too much attention to the charts today, which was kind of nice. Did take a trade. It almost feels like you can't get away from the markets even when you try. Um, Took a trade, but was not at my desk most of the day. So as far as news and things like that, I'm going to rely on what we see in the Trader Hub. I know that there wasn't much as far as planned headline news goes. We are, in this shorter week, Thanksgiving holiday on Thursday. We do have some news planned tomorrow, but for today, I'm not seeing anything as far as a planned number that I'd really pay attention to have an effect on the market. Um, any other headlines that I may have missed, Coach?
I guess the named the Secretary of the Treasury that gapped all the treasuries higher, and the equities. I wouldn't have thought, if you asked me Friday, that would be that big of a deal, but I don't know. Once again, I don't try to interpret the news. I interpret the markets and manage my risk. But yeah, that's the only headline I saw. It all started last night on the opening.
Yeah, it did gap open. I did see that. And we're looking at the headline here. And again, I'm not going to trade headlines. Coach Paul's not going to trade headlines, but sometimes they may affect the markets. Donald Trump's nomination of Scott Bessent for Treasury Secretary. Hopefully, I said that name correctly. Betting that the hedge fund manager will bring a Wall Street perspective to the position, and maybe causing some of the effect that we've seen in the markets today. I'm going to switch over to the quote board to take a look at the top percentage movers on the day. There are about 35 different markets that we can trade with Topstep accounts, not just the equities. And let's look at the biggest percentage movers to the downside. We have gold down 3.09%, platinum down 3.15%, and micro Bitcoin, our biggest percentage mover to the downside, at 4.51%. Saw a lot of headlines over the weekend about the sell side liquidity that's sitting up above 100,000 in Bitcoin, in spot Bitcoin. So we see a little bit of a sell off, maybe some people front running that 100K. I think eventually, if there's that many stops there and we see money continue, it's probably one of the more interesting stories that we see in any market right now, just from a volume perspective, right? If there's a bunch of selling at 100,000 and a bunch of buying who wants to see Bitcoin higher, even higher than 100,000, we'll see who wins, right? The buyers or the sellers. I've seen various headlines of who's buying what and in what quantity. We saw the U.S. Kind of determined that they were going to buy an allotted amount of Bitcoin for the next couple of years. So very interesting to see how that plays out. I think personally, I find it very hard to see Bitcoin staying under 100K for very long. But of course, my opinion does not mean anything. The markets are going to do what they do. And I'm excited to see that part, right? Just excited to see how it plays out.
Yeah, interesting there that this break would come from the nomination of Treasury a Treasury Secretary.
Mhm.
Bessent is interesting though. He's a Soros protege.
Okay.
He was a big trader. That's where he cut his chops. Was very successful. Became a hedge fund manager on his own. Didn't do as well. Came back. I found it very interesting though. Was a big donor to the Trump campaign though. So
Okay.
that's all I know of him. I guess Wall Street liked it. We'll see. But it did make an effect.
Yes, it did.
Bitcoin, gold.
Platinum and the treasuries. So look to the upside. We talked about the downside already. To the upside, we had the 30-year bonds up 1.67%, the ultra bonds up 2.39%, and nat gas, our biggest percentage mover, to the upside at 4.78%. And like we were talking, Coach, some of these moves that we're seeing in the treasuries, the 30-year and the ultra bond, likely because of, right, we don't ever want to say why or that news is why, because that nomination could have sold the markets off, but there's favorable price action after uh, that nomination, so you could kind of put two and two together, but I'm personally not going to make many trades off of that either. But we're seeing some effect in the treasuries.
Yeah, there was a gap and go.
Yep.
Interesting that gap and go was on the downside with Bitcoin. So
Right.
it was a pretty big move. Yeah, it hurt a little for my swing trading, but
Oh man.
hey,
Um,
it's the risk you take.
It happens. It happens. Measured risk. I'm sure even if it hurt, it hurt. You measured that hurt, right? You measured exactly what it was going to be before it was.
Yeah.
Uh, to round out our big four, we have the S&Ps up 0.44%, the NASDAQ up 0.28, and crude oil just outside of the top three biggest to the downside. Crude oil down 3.05%. Start with the equities just because I have this NASDAQ chart up here. We've seen a gap in a bunch of different markets. The NASDAQ opened up with about 0.25% gap. Didn't look like it did too much in the overnight session. I was looking to, potentially take a trade, but didn't see one here. A lot of chop in the overnight. Maybe some decent opportunities to buy, but if I'm looking at, VWAP leaving this first 30-minute range, never really did in the overnight session. So I don't see too much opportunity there. And if we pull up the moving averages, Coach, these markets, wow. We've
What is that?
that white line is the 200 moving average. But we're in an uptrend on the 30-minute. We see the 200 moving average is the white line, the 50 is the purple, yellow is the 20 moving average. We're in somewhat of an uptrend over the past couple of days. We see the 200 start to act as a support. In the overnight, not too much. The New York session opens up, and I'm going to go down to a shorter time frame. We peak above 21,000. Today was a perfect example, just kind of reviewing the charts of this 3-minute opening range playing out pretty nicely in the NASDAQ. I'm going to attach another VWAP here. We'll make that one blue. The blue VWAP here is attached to the first 3 minutes of the New York session opening. We'll do that one more time. Here it is here. We already talked about the overnight being kind of quiet as far as price action goes. We shoot up above 21,000 on the New York session opening. Volume doesn't leave that 3-minute range, and we almost immediately turn around 100 points, 150 points to the downside. Could have taken this short right at the lows of the opening range here, 20,956. It is holding as a resistance. We can see VWAP didn't leave the range to the downside, but a rejection or a failure to leave the range to the upside could be signaling that buyers are not in control. But if we've had traders ask, where's your entry? Where's the perfect entry? If I'm living in an ideal world, it's right here, where we had volume leave the range. We had price test and fail at getting back into that range, and then going from there. Of course, there were a couple other trades that you could have taken before that, but that's one of the cleanest examples that I've seen in a while.
Oh, it was perfect example. That's the where your patience works out.
Right.
And let's go through that. We were so much higher on the opening.
Yeah, we
Now,
were.
my thought, well, as I wasn't trading NASDAQ because I didn't have a position. It had to go fill the gap. Um, this is in the NASDAQ, and by the way, it was how many points higher?
On the open, if we're going from the settlement price to the New York session open, we were already, I believe we were half of a percent up, if I'm not mistaken. Yeah, a little over half of a percent up on the New York session open
On the
from
opening.
settlement. Correct.
So right there, that's a lot of weight. That it's
Hmm.
so while I would be, let's say you bought it, you could have bought it and lost very well.
Correct.
Um, I didn't buy it because I didn't like. I'm not going to buy something gapping and it's a half point because I have. To me, it's like nothing but weight. Let it go without me. But what I found interesting in your 3 minute, and I have to develop that patience. It took what, about an hour?
Yep. Yep.
Now
Almost
that's
2 hours. So this test here is at 10:30 Central Time. So almost 2 hours after the open, it gets a perfect test. And yeah, that patience is difficult. It's hard to do.
if you get filled on that. Let's say you had a price order, because
Hmm.
you know what was interesting. It never closed above that VWAP. 2 hours later, did it? It just touched it.
Just a test of the view up and rejection from there. No close above.
Okay. So on the way I look at it, if a test and doesn't close on that close, I'm going to sell that close and risk a close above VWAP or the full
Yep.
opening range. Doesn't mean I have to take that much of risk, but it's a good place to begin the battle.
Correct.
I wouldn't have expected, oh yeah, I can say it expected. That was because we gapped open. Think about how much time the buyers had in the morning.
Right.
The buyers and all the buyers on the opening, which was the highest volume, I believe.
Hmm.
Okay, think about that. How much time they had? What, 10 minutes of green trade?
Right.
Um,
Yeah. 10 minutes of green. They had the opportunity. We hear Hogue talk all the time about the overnight inventory adjustment, where if you're looking at it, there was a gap up, and then the overnight inventory was long. Now, if we go into kind of the thought process behind market participants, if the markets are gapping up and I didn't get in or I wasn't able to get in and I'm trading size, I'm not going to buy it up here. I'm going to wait. And that's, to me, the psychology of seeing the gap fill a lot of times. The one thing I don't like about this trade, ironically, is that the gap fill happened before this perfect test. So if I did take this trade, I'd be thinking about what is the potential of us filling this gap after we already did it um, prior to. It obviously, it turned out it played out and we closed within the gap, the overnight gap. But this would have been some information I was looking at to see, the potential to fill it again after we've done it already. But turned out to be a pretty nice trade.
yeah, like you said, that gap also was the previous day's volume value area.
Correct. I'm gonna go over to the S&P, coach, because I know you did say you had an S&P trade, and we've been talking about volume profile a little bit. So I'm gonna put a profile on Friday. Friday's range, and we'll go with the standard profile. settings of 70% for the value area, and S&P's similar story, gapped up, had to fill the gap. What were you seeing here with this volume profile, Coach?
Well, that's in that volume profile we had value. Bottom of value is the bottom of that white glob there. Um, what did we get there? We filled the gap. We filled the value area versus what an hour before we were way above it.
Yep.
We had a gap. Um, what's that word? Value. Difference between some people, there's an old saying, some people know the price of everything and the value of nothing.
Yep.
That's what's the value of the value area. That if being short there is in that area, if you're short, it's it's in value and it just broke what 60, 50 points.
Right.
Um,
A little late, maybe.
two things to think about. Is it going to continue? Probability, thinking in probabilities, I'd say there's an 80% probability it's not. Um, so good place to cover shorts. And if you were patient, what we got, if you were patient, then, I'd be a lot more patient if things would just go my way sooner.
Of course, man. It's so easy to be patient when you get exactly what you want.
But,
Just like, oh, I don't have to wait for anything. I just have to experience exactly what I was looking for. Yeah, it's again not an easy thing to do at all to be this
so,
patient. But go ahead, Coach.
yeah. But even then, you don't have to. One of the things is you don't have to look to buy the low or sell the high. Get that out of your mind now. It's one of the worst things you can have.
Yeah, right.
Um, it's like now we go into value area. We do what? We wick,
Hmm.
and this might be a J trade.
Let's
I
see.
didn't look for it, but it might be.
The one
No,
thing it's missing is the high volume at the bottom. We didn't get that
all right.
exhaustion print at the bottom. We kind of just tested into value, decided that we weren't going to go any lower, and stopped around there.
But then when we make that, we get over that high of the low candle. Now I've bought value. Can I risk the new lows?
Right.
So
It's a nice
um,
trade both ways.
I actually hedged a long put. I've been a long call. I've been holding, and then covered that because of that. Um, and it helped me with the beating I took in the treasuries.
Oh yeah. And we can talk about that. I know you traded that, so let's talk about some markets that you traded it as well. We got a question here from Kevin. Any advice for staying out of the ranges? Wait for it to form. So my advice for staying out of ranges is to first have something to identify that you are in a range. And then if you're saying you want to stay out of ranges, you're saying that you're not going to trade a range bound strategy and potentially not trade it at all. For me, on a shorter time frame, if we're going New York session, two simple rules. Allow the range to establish first. Now you decide what range you're looking at. It could be 1 minute, 3 minute, 5 minute, 15 minute, half an hour. For me, it's a 3 minute. My rule says you should not be taking if volume is in the range, you should not be taking any trades. Right. So this VWAP line here, if I have the range established and the volume is in the range, I should not be taking a trade. Right. That's to me the simplest way to stay out of it. If I follow those rules. If volume leaves the range, then I can follow volume out of the range. Right. And that's what it is for me. Do I take trades that break those rules? 100%. Coach, you had a quote about a month or two ago that said, you can break rules, you can't break principles. I may break that rule sometimes, and sometimes it may be a very good reason for me to break those rules. But if I do, I'm not going to risk my whole account doing so. So you're going to, if you don't trade well in ranges, you're going to find some characteristics to keep you out of range trading, but you may every so often find yourself in a range trade. breaking your rules. You may not be doing it intentionally. You just may think you see something and you put a trade on. That one trade cannot destroy your account. You can't let it do that, right? So whether you find yourself in a trade that you love or a trade that you don't really like, your risk has to be managed. Either way. What would you say, Coach? How do you stay out of ranges?
I don't know how to identify if I'm in a range, but I have a plan of trades that I'm looking for.
Mhm.
And I stick to trading the plan that, there's certain the DNA of a trade that I want to take, the risks, defining what risks I want to take. My biggest losing days are in range days. Then it becomes managing my equity.
Right.
All my trades, I will never lose more than 12% of my equity in any given day, ever. It's done.
Yep.
Because I know from my experience, the range days are not the days that fit my risk or my trading plan. So number one is have a trading plan. Look for like this. We're talking here, let it.
Oh, Coach,
Even
you turned
if
into
you
a
buy
robot.
it, you don't let it go past.
Uh-oh.
Should I do the robot dance?
Coach, if you want to try leaving and coming back in.
All right.
All right, Coach Paul should be back. Every time he starts giving out some great information, someone's hacking into his microphone because he was trying to tell us how to manage your risk regardless of where you're trading. We know how Coach Paul works. He uses 2 ATR stops, and whether he's in a range or a trending market, he's going to limit the amount that he can lose on any given trade. Let's see if we got him back. Want to test your audio real quick, Coach?
Check. 1, 2, 3.
Nope.
Check.
It's
Checking.
still pretty bad.
You continue. I'll sign back out and try
all
something
right.
else.
Sounds good. Thanks, Coach. All right. Where do you find the ATR? The ATR is an indicator. If you look at indicators here, I use the ATR, average true range indicator. I just have it down here. You can have the line. I personally don't need the line. I just need to know what the number is. But you can have it set like this. And what he's looking at as far as the ATR goes is whatever time frame you take the trade. So let's say, for example, this S&P trade here, I was buying somewhere in this, value area, right? Let's say I bought value area high, which was at 59.89, but I'm looking at a 30-minute chart to do so. We can see on the 30-minute, the ATR is 9.5 points. So what Coach Paul would do is 2 ATRs is his stop, which would mean 19 points, right? 19 points for your stop. And we can see how far 19 points is out of the way, right? Even if I bought the high of value. Now, the thing is, 19 points might sound pretty expensive to you if you're trading a 1 lot, a 2 lot, a 3 lot in the minis. And that's why, you put the whole puzzle together and you'll hear us suggest to trade micros because 19 points with a couple of micros dollar-wise fits the Topstep accounts, right? You might hear, you need an 80-point stop on the NASDAQ based on a 15-minute chart, and traders are going to look and say, well, 80 points is way too much. If you're trading micros, then it's not, right? So when you're taking some of these suggestions or things like that, take all of it as a whole, because when we're giving some of this advice, it's with a smaller account size in mind. But let's see. Let's keep scanning these markets. I'm gonna let's see. I think I got Coach Paul back. Give me 1 second here. Let's try to bring him back in. All right, Coach. Try it again.
Checking.
Oh yeah, there we go.
I am robot.
Yep, sounds good. We are good to go. We are good to go. So was just going over your 2 ATR example, Coach, but let's move on to the gold charts. Gold, one of our biggest percentage movers to the downside today. Really big sell-off in gold. I'm going to go out to a daily chart, and we'll look at the moving averages first. We've talked about this a little bit in gold. we made a new all-time high at 28,018, and since then we've been kind of selling off. The one of the largest daily volume candles we had was on a election day, where we had the sell off. I think it was about almost a 4.4% sell off in gold. We had a little bit of a relief bounce to around 50% of that area, but we can see where we're kind of rejecting. Net price is 2710. And then today, another sell off again, maybe due to the Treasury news, maybe due to more sellers than buyers. Either way, we saw a 3% down move in gold today. If we go to a shorter time frame chart, we go to a 30-minute and look at last night's open. On the 30-minute, we were above the 200 moving average for the last couple of days. Like we talked about, that relief bounce from the sell pressure that we had. But here is last night's open in gold, almost making a high of the session on that first 30 minutes. If we attach a VWAP to that, we can see again, volume doesn't leave the range to the upside. Price does, and price does close outside. Now, this is a 30-minute chart, so it spent some time up here in this area, but we can see volume not leading us higher, just kind of price going with it. And back to Kevin's question, how do you stay out of the range? If I'm looking to go long here, volume never went with me, right? Until we got some selling. Again, are you this patient to wait for it? Maybe you take it here on the failure. The failure to push higher is could potentially be a short signal, right? We haven't really playbooked that trade. But this could be, go ahead, coach.
Well, you said that the price left, but VWAP, even if you were aggressive and you bought it, because I think the gold market from Friday till today did a great jab step, ankle breaking, pivot moving, and got buyers going backwards. It was just so, like we said, avoiding the range or avoiding the big beating.
Right.
You bought that two things. You had to accept the whole range of the open. That was a pretty big buy.
30 points.
And I didn't want that. I didn't look. I looked at it. I'm like, I want to buy it, but that's too much. From Friday's action, but two things. If I bought that breakout, if it settles under VWAP, I don't have to wait to take the whole loss.
Right.
It's showing me right there, right there. All right, I bought someone's burden here. Show me more. It could go. It could rally again and break and VWAP break out, but at that point, literally, I'm buying the imbalance.
Right.
Now, take the first loss is the best loss. No problem. There is no shame in take. This is where I come. It's really important. It's not working.
Just accept the loss.
Accept the good loss. I just can't say that enough. But on the sell side, if you sold that,
You had a great day.
You should have a great day. But let's say if you said, okay, I will let it go to the bottom of the opening range and I'll cover. Nice trade.
Yep.
Which is a very good day trade.
100%.
I really sometimes now look, and then it's not enough. I shouldn't have got out. Fuck it, I'll sell it here. I want it back.
Right.
Does this ever happen to you, coach?
Yeah, then you end up selling right here. You end up selling here 26.61, and then the market goes the other way, 30 points against you, because you wanted more. Coach, been making a lot of references, and just hanging out with some friends over the weekend, just talking about what they do for work and things like that. And the book that you recommended, The Way of the Hunter Warrior, came up, and even recommended some friends to read that. If we think of ourselves as the hunter in the markets, and we catch this short, and this is you eating what you've hunted, this shouldn't matter.
Good
Because
point.
this may not have been in your game plan. This was in your game plan. And you've eaten already. So now, can you say, oh, I should have caught this part of the move? I think that has to be in your expectations. right? Oh yes, the market did go another 2% without you, but at what point was that part of your plan in order to see this? Now, if it was part of your plan and you didn't catch it, different story. But here, if the plan was to sell it and then cover at the low of the opening range, you did your job, right? You identified what the hunt was for, you captured it, you were able to eat, and anything after that um, is would be extra.
Uh, what a great point. Like that's I think that it's one of the things that isn't said is that's where greed comes in.
Hmm.
And I've done it. Now you've lost control. It's so tempting
Yep,
because it's like fuck. You almost feel like it's yours that was taken away.
correct.
And with as a hunter, you just bag the deer. You're gonna eat.
Yep.
You might even share it with some family.
It is Thanksgiving week. It is Thanksgiving week. So let us
Yes.
know in the chat what your uh favorite meal is, favorite part of the meal for Thanksgiving. Let us know in the chat. It might be deer. It might be deer
Might
that someone's going out to hunt, but when you catch it, that's your catch, that right? And this presented another nice opportunity, but that failure to kind of reset and reassess after you're in a trade and then just jumping back in can get you caught up in something like this where, oh, I should be getting more out of this. Um, and there might not be anything left. Um,
Yeah, good point. And but we on at the what was a night was down almost $90 today.
yep. Big
Notice
move.
we didn't say it was down $90. This was I mean it's just when you look at a chart this way, it's well within reason. We go back and look at the daily.
Yeah.
And we gave back half of that rally. Now, can it continue here? I'm starting to think today's action was a good knock in the chest of the Bulls.
Yeah.
And
Engulfing four 4 prior days, that whole last week's range on higher volume. Um, yeah, it's looking very heavy. Looking very
we're
heavy
under the
engulfed.
20 and the 50. Yeah. It's definitely lost its momentum.
Looking
Um,
for this white line on the daily still. I think we talked about this a little bit before, but the collision course where this white line keeps trailing the market up, the market price keeps coming down somewhere around 2,500. And again, I don't want to predict because I'm not going to make any money off of that prediction, but that's kind of what I'm seeing here
yeah. We could just say that Bulls have been challenged the most in a couple months.
for sure. Any other markets? Let's talk about crude oil real quick, and then, Coach, I want to ask you a little bit about the treasuries. Um, I traded just a little bit. I think, like I said, I took 2 trades. One Japanese yen trade short last night. Uh, in this combine here, this was I think it was a Nasdaq long. Um, but didn't pay too much attention to markets today. But let's look at crude oil. Crude, we had a little bit of a gap up last night. Gap up making the high of the session. That first 30 minutes making the high of the session. Looks like a really nice sell. Crude, again, another market that was down in our close to our top percentage movers. Crude down 3% today. And to me, Coach, looks like it's doing that crude range between $67 and $72.
I- It's violently unchanged for the year.
Yeah,
Um, Once again, that opening, why it gapped open, because probably everything else gapped open. I don't know why, but if we measure that buying, it's another one where VWAP never left the range. Actually stayed at the bottom.
yep.
Left it, and once again, as this is the same trade. If you're patient, get another crack at it later on, where we see the highest. We come in and then we see the highest volume. We get under VWAP. What time was that?
This is 8 a.m. Central Time. So this is the
All right.
open. Let's go to a shorter time frame and see what that looks like. Go 3-minute opening range for the session open. We'll call it 8 a.m. Central. Yeah, at that point, volume started to pick up, and that's some
Great.
urgency.
That's some real urgency. So once again, time frame. Um, Drastically different between the 30-minute and the 3-minute,
Mhm.
but putting that 3-minute on the U.S. Open, we're trading U.S. crude. It gives you a good place to understand what the biggest volume on average of the day, how it's going to react.
Exactly.
And I tell you what, I was after last night's action, that's a hard trade just looking at price alone. What's making new lows? I can't sell the lows, right? I mean, these are things that go through our minds as traders. But using that objective, breaking it down to 3 minutes, okay. We used to have a saying in the pit: ask someone, "Are you stuck?" Yeah, I'm fucking stuck. Good, stay stuck.
Right.
Because as long as you stay stuck, this market's going to keep moving because you're fighting something
Correct.
versus a price. That's stuck money.
Yeah.
By
They
putting
have
that
to get
view
out.
up, we can say, yeah, they have to get out.
Have to get out. And you're going to see the biggest moves then, right? When sellers don't get to necessarily demand a price, and it looks like just high volume at whatever price it happens, um, and there's no buyers in that market, we'll see these 3% moves, right? We've had them in the equities as well, where it looks like liquidation happening, where they don't have a choice, and it happens both ways as well, right? Anytime you see a 3% move to the upside in the equities, uh, the sellers were stuck and they are forced to buy it. Coach, I've heard you say, losers move a market. Um, and this is a perfect example of that, right? Buyers couldn't push above the high of this range, eventually have to sell. And we get some pretty quick movement to the downside. Anything else in crude?
Um, Nothing else. Anything else? I think would be over analyzing.
Agreed. Agreed. Yeah, if you look at this on the daily, this is insane. Just it really looks like sell the highs of the range, buy the lows until it changes. But everything is fairly flat in crude oil as we zoom out. We got a question here from Nate Silva. I was up $1,000 this morning. Stupidly kept trading. Ended up blowing my account. What do you recommend to combat tilt, revenge, over trading? I trade of it, not Top Step X, so I don't have the lockout. Nate. So first of all, you're doing something right where you're up $1,000 on the day. Maybe in your trading plan it says continue trading if you see good setups. So go from there. Just understand that if you continue trading after making money, if your next trade is a loser, the money that you lost is lost. Don't try to go get it back. And that's what happens a lot of time, right? Where you were up $1,000, you take another trade, you go down. Let's say you lose 250. Now I'm at 750. What happens is, man, I just want the thousand that I had back. So you try to get what you don't get it back. It's not yours. You decided to keep trading, and that's okay because you may have seen a setup, but we don't get to decide which trades are going to be right and which trades are going to be wrong. So when you're making money, you want to protect some of it, and then to say I was up 1,000 and ended up blowing the account, I could probably tell that your mindset switched to monetary and emotional almost immediately, where you wanted that money back. You have to fully accept that that money is not yours anymore. Um, can you get it back on the next trade? Potentially, but that shouldn't be the goal. The goal should be to identify the next good trade setup and take it from there. What do you recommend to combat tilt over trading? Take a step back. Take a step back. Even today, like I said, last Friday, I kind of put myself in the mindset that I wasn't going to trade much. Even that one day, I feel clearer going into tomorrow, not having to be in the thick of things, right? A little while ago, that break would have to be a lot longer for me. right? It'd have to be a week off. I've taken 6 months off. But if I find that I'm in that kind of just treading water and trying to fight the markets, take a step back. Be your own risk manager. What would you say to that, coach?
Two things. When you made that $1,000, was it part of your trading plan or
Good
did you
question.
get lucky? Only you can answer to that. I know I've gotten lucky and thought, wow. And then I spun out of control because two things. I got the $1,000. I had to make another trade. That one cost 300. I'll just make another trade to get back my. That's not a plan. So
Right.
I go back to trade your plan. Go over it. Your plan can't be. I like this.
Hmm.
I'm, and I'm not putting anyone down because I know that's especially younger traders. I really like this, and it's hard to execute a plan when you're in a drawdown. But in
Right.
this case, you were up 1,000. I don't know if that was part of your plan, but what happened? You lost control and you lost your account. Right there, they have all the evidence I need to say that you were trading not to lose.
Right.
And then you probably added to a loser to get back the original. So, two things. If you're up 1,000, next time you give half back, you're done for the day.
Hmm.
We just talk about hunter warrior. You hunted, not only you might have got a 10-point buck.
Right.
You're gonna eat for a while, but that wasn't enough. You want
Right.
to get after a bear, and you pissed the bear off, and it got you.
Right.
That's greed. So next time, if you're up that 1,000, if that was part of your plan, I don't know what combine you are. I don't know what your that should be enough for the day. Period. That's a good day.
Right.
Two things. If you decide if you give half of that back, you have to stop.
Yep.
Third level of don't ever let it happen again. 12% of your equity, 15% of your equity, and you save the account from yourself.
Right.
Those are principles you have to accept, or you are going to be vulnerable to this happening again. So learn from it. Remember, it's not quote unquote your money. That's why we go and trade on Top Step so we
Hmm.
can learn these lessons without losing the house, the ranch.
Right. Correct. Learn from it. It's an experience that all of us have had as traders and have to learn from. Um, just
I had
identify it. Go ahead, coach.
with that. There was another. A Mo made a comment. Anyone else change the time frame of charts to make yourself feel better about being in a losing trade? Thanks for bringing that up. That's the same. Yeah, that's another one. I got in on the 10 minute, and it's in a losing trade. But let me look at the 2 minute, the five, whatever it is, and you're trying to feel better and look for another reason not to get out of that loser. I'm glad you brought that up right now. If you get in a trade based on one time frame, you have to exit based on that time frame, no other time frame.
Right.
It's extreme, but thanks for bringing that up.
Awesome. One more question here from Dan Trader. Can you go over your risk management overall? You will risk 12% of your equity, right? If you risk, okay, hold on, let me read this again. Can you go over your risk management again? Overall, you will risk 12% of your equity. If your risk per trade is 2 ATRs, do you know how that risk per trade works out percentage wise?
Yes, and with that, that's why in combines using micros is imperative based on those risks. Two things. My 2 ATR risk scenario is a parachute or an ejection seat, and because anything can happen. You can get around long enough, you get this what the hell just happened? Um, some news event come in and push the market 2%, 1% in 5, 10 minutes. You've been around long enough, that'll happen. With that stop at 2 ATRs, I protect myself from blowing up. Other side of the coin is less than, it's about 15% of the time, maybe even less, that I get stopped out. What it gives me is time, like we use for instance, the 3-minute opening range VWAP trade.
Yep.
If it makes a new low, then I'm out. Like, it's less than 2 ATRs, but I put a 2 ATR stop. That 2 ATR stop is to protect equity. If your goal, because the goal is there's to survive in these combines, correct?
Correct.
You're being judged on how you can manage money under pretty tight rules. The upside to that is if you can do that consistently, you can manage money, you can trade anywhere. You have you've developed a talent because it's about managing your equity, not getting on a big trade.
Right.
So that's what yeah, it's measured. I have a much bigger account than a $150,000 combine because that's $4,000. If you're losing combines or losing XFAs consistently, go back and study the risk that you took getting in.
Right.
All right.
Got some questions about Chauncey's asking what did I do to make this 1500 in this combine today? It was a long in the NASDAQ from 20,901. Kind of as we bottomed out in this range here, was actually getting ready to drive home from where I was and just looked at Topstep X, looked like kind of basing around the lows and put the trade on. But it was a long from 20,901 and then taken off at the highs or at the lows of this opening range. Uh, what else do we got here? Why do I feel nervous trading a new XFA? This is from Kevin again. I know it has to be a mental barrier. Scale down is the key. You feel nervous because you don't want to lose real money. Um, the pressure of making real money is probably getting to you. You're saying is scaling down the key? It can be, but I think there's there's a let's say you got to the XFA safely, right? Trading reasonably in the combine, right? Not just putting on 15 contracts, passing it in 2 days. Let's say it took you a little while to pass that combine. Scaling down, I personally think to a point, may have some diminishing returns because do you scale down so far that you're not accepting that trading is pressure no matter what, right? We can't avoid the pressure of trading if you're going to trade, right? Every decision you make is going to have a monetary effect, right? Either you're going to make money or lose money. So you can't completely avoid it. So I do like the idea of scaling down, but scaling down if you rush through the combine, absolutely. If you, let's say you took you a month to pass, I'd say you're probably trading at a reasonable scale. Stay there and just accept the risk and manage your account. Um, because sometimes the solution isn't always scaling down. What if you're only trading uh, one micro? Can't scale down there. Go ahead, coach.
Oh no, go ahead, continue. I was just moving my microphone.
Oh yeah, no. So if you're trading reasonably and be honest with yourself about how you got to the XFA, trade your plan, trust your plan. Don't allow, try not to think about the money, right? And it's a weird thing to say because we trade to make money. But if money is the front of your mind, then you're not making sound trading decisions, from my experience. Um, but if you're trading reasonable size to get there, just continue doing that. Um, and we just have to accept it. We just have to accept it.
Now,
Anything
one
you got
other
on that,
thing,
coach?
yeah, well, it's like a professional ball player going from the minor leagues to the major leagues.
Hmm.
There's going to be some nervousness,
Yep.
right? And nervousness lead to bad decisions or less than decisions. For the first week, cut it in half. And just or like I say to my players when I put them in, start on the defensive end. Get into the game defensively. And
Yep.
then you're building up a sweat, you're building up some momentum, and then you get into the flow of the game. When, when the coach would pull us, get in the game and just throw up a shot. I mean, then probably because your brother or your uncle said, "Hey, you got to score,"
Right.
whatever. But start out defensively for the first week. You know, put on your trades, but that's defensively is scaling down a bit. Get in, get comfortable, um, and then build up your momentum because it happens a lot. I mean, it's not. It happens. I would say a majority of the time.
Agreed.
Um, and for good reasons. We're all human. So when we talk about skill, I'm talking about trade defensively. Rein it. I wouldn't cut my. Um, I'd cut my size more than my risk parameters.
Hmm.
Um, and then you survive because the idea is survival. And when you're just getting in, warm up.
Yep. Nothing wrong with that at all. Jonathan Torres says, I'm trading one MNQ, being successful. What should I scale up to? Trying to pass the 50K. If you're successful trading one MNQ right now and you're still working on passing the 50K, Jonathan, I wouldn't even think about scaling up yet. Keep doing what you're doing. You're in a great place. I honestly think most of us would fare better with only making changes to the size we're trading maybe once a year. Uh, because you can really live with those numbers and see a lot of success. Like you said, with one MNQ, you don't necessarily need more than that right now. And you're going to know, right, when you're comfortable. Just know that if you go from 1 to 2, you're doubling the risk that you're taking, which is okay because you're already starting off small. Um, but just continue to trade your plan. Let's see if you can pass the XFA or pass the combine with one MNQ. Then you can tell yourself, I don't need much more than that. Um, you could make some decent money trading one micro NASDAQ.
Mhm.
All right. Any other comments you see, Coach? I have the 10-year
Ah,
chart up here. Go ahead.
well,
What happened?
before we do that, Swiss franc, and we saw
Oh
first
yeah,
Swiss franc yesterday.
Friday. Swiss franc we were looking at. Yep.
Okay, we saw well, from the daily. We saw Head and Shoulders, and I'm like, wow, I really want to. What did I say? I want to sell this.
Mm-hmm.
Now, I'm talking about defining a trade, willing to take risk. I said, well, I'm going to watch the first half an hour. Let's look at the first half an hour.
Gapped up like everything else did.
Gapped up, tag a VWAP. I consider that trade not taking a sell. See, I could have forced my opinion,
Yep.
but the market put in new information and said, well, okay,
We don't
maybe
agree.
not today. I don't agree. That's
Right.
flow. I'm tugging on Superman's cape. Don't spit into the wind. I mean, there it is. Like if I was my younger days stubborn, well, the fucking market's wrong, and I'm just gonna sell one,
Right.
and then it goes against me, and well, time to add another one and can get an average because when I'm right, I'll make twice. Whatever. If you fall victim to that, recognize it. Use something like this. Make the market show you what's right.
Agreed.
Don't force anything. So I just want to go over that because that looked like it was going.
Yeah. And I think we said it on Friday too. And Coach, I think that's just a great point you made. And if you guys are listening, pay attention to what Coach Paul just said. And if you don't know exactly what he's talking about, watch At the Buzzer, the end of it on Friday, last Friday's episode. Very like not adamant, but hey, yeah, this is going on my scouting report, not a market I've looked at. I want to sell this. And I think I even said it, right? Where, anything we talk about here is for educational purposes only, not a suggestion to take a trade. But I know if Paul takes this short, it's going to set up on some type of medium time frame. And he just said, right? Perfect example. I want to short this. The market didn't agree. I could try to force my opinion, which was wrong, or I could just pay attention to what the market says. And that to me is a perfect example of how to uh, trade with a bias when you have one. Um, Sometimes admitting that you're wrong is exactly what you need to do. So thank you for bringing that up, Coach, because sometimes we forget about these, right? Where it's just like, hey, that's actually a win. Because if I went with that opinion, this would be a losing trade. This is a great winning trade here by not allowing your bias to force you into a decision that the market did not agree with.
Yeah. Now let's look at the 10-year.
Pull it up. Here's the 10-year. Gaps everywhere.
Gaps everywhere. Now, on a swing trade, I've been short that.
Very nice.
But this time, what happened to that 200-day moving average? And by the way, I had some calls against it, but still not on. I kept the calls. But what I'm going to say, at one point, this gap, what else do I need to know?
Right.
Here's another thing. If I wanted to buy it, it didn't make it easier. But what happened? If patience, we got to the 8 o'clock U.S. Open.
That's right here.
And we took it. So look at this. Even VWAP, if we attach it to that opening range, this is being forced up by unwilling buyers like me.
Right.
Oh, it's definitely short covering. Did I cover a short? Yes. Am I glad I did? Yes.
Yeah.
But once again, we're talking about not falling into a trap of having to be right. This didn't kill me. Did I like giving back profits I've made the last month? I'm human. But there was plenty of information there to say,
Yep.
stop selling this thing.
Yeah.
So
Would you say
if we
that
go to,
information is kind of this gap up above this 200 moving average?
oh yeah, on
Yep.
a Sunday night,
Yeah.
I didn't agree with, come on, it's the Treasury pick.
But
Whatever, I still might agree. It doesn't matter. Taking a loss on that, or actually, I was giving back money. Well, I don't know what short term or longer term. I just wanted to bring that up. Is like at one point you get information. You might not like the information because hey, I want what I had on Friday. Yeah, well,
right.
you don't have it anymore. You have to be in the present. I had a feeling that gap might get filled, like the S&P.
Mhm.
Once again, my feeling meant nothing. So
Right.
just to show, one of the things I don't want to show is about that just finding the good trades. It's also having to get out of a losing trade or a trade where you had money and it's coming back and it hasn't reached it hasn't reached your profit target yet. You're getting new information, whether that be it's above the opening range or it's back above VWAP. You might not like the information, but protecting capital,
Right.
being stubborn on that, it only got worse. And at first I gave it the first half an hour. Like, okay, now
Yeah.
it's settling into that range. It might go back and fill the gap. It didn't. I didn't know that. I just had to take. I had to give back what the market took. Period. I'm not
Yep.
attaching myself to having to be right, and I find that is one of the most important things if you're a new trader.
Yeah, I would agree with everything you just said there, Coach. You may not agree with the market's information, but when it's against you, you have to still protect yourself, right? Because there are going to be some times where the market agrees exactly what we're thinking, but we need to be present in the game in order to take advantage of that, right? If I try to force my opinion every single time, whether right or wrong, I don't get to take advantage of the right ones, right? Like you said, you were in this on a swing trade for part of the month, where the market agreed things are going well. But at some point, it's not going to agree, and that's information as well for your trades. I just realized we're at an hour. Also, that went by
Oh,
really quick. Just want to do some quick plugs. We have made a change to Top Step X. We heard Rips talk about the shot clock almost a year ago, I feel like. But new risk settings on Top Step X. I'm going to show it real quick. If you click on this gear settings, you can set a lockout. I really love this. You can lock out based on a session. So if you are terrible at trading the New York session, click the lockout. Don't even trade it. If you don't want to trade the overnight session, right, you can close that out. Lockout Tokyo session, lock me out. So I'm going to set that, and I'm not able to take any trades during slow markets for this account. You can see the countdown. I can't change that now, which is amazing. I really like, locking the locking the door and then throwing away the key for a couple of hours, because sometimes these risk settings are very easy to just go back in and change. You can't do that. I know that I'm not the greatest at trading during that Asian session, so whatever, lock me out. I'll trade this account during the New York session. So make sure you take a look at those. If you don't want to lock out for this long, let's say you're just having, a bad New York session, but that's normally the time you trade. You need 30 minutes to make sure you can't trade. You can go in, say, hey, lock me out for 30 minutes. You're not able to trade that account until the countdown finishes. And hopefully during that 30 minutes, you do something, instead of just sitting and staring at the charts and saying, well, damn it, I should have did this, and that. Take that 30 minutes as a chance to walk away from the markets, get a reset, breath of fresh air, go grab a coffee, do some push-ups or something like that. So when you come back to your desk, you're in hopefully a better mindset to continue to make decisions. Um, Traders who have made $5,000 with Top Step accounts, if you've taken a $5,000 payout, you are eligible for a hat and a pin. If I can find the link, which is a pretty cool hat. Andre actually wears it all the time on Topstep TV. If I can find the link, I'll put the link in the chat to the 5K Club. Here it is. I'll remove the part that says drop the link in the chat. But there's a link to the 5K Club. You can fill out the form there. You may be a little bit delayed. I know the team is sending them out as they get requests, and these are going to be shipped to only traders in the US for now. But if you want your 5K payout club hat and pin, make sure you fill out that link. Remember, Thanksgiving week this week. So Thursday and Friday, Topstep TV will be off until Sunday. Coach, you got any words before we go?
Just the same. Develop your plan, trade your plan, manage your risk. Be careful this week. No need. You don't have to trade Thursday or Friday. You could take some time off and relax. That's it.
100%. Take some time off. Even if you don't celebrate the holiday, just take some time off to get a reset. Markets may still be moving. I don't want to say that the markets aren't going to be moving. A clear example today, we saw a decent amount of movement. So if you're going to trade, looks like we're going to have some volatility, hopefully continue. But wherever you do, manage your risk. That's all I got. Trade
All
well.
right.
We will talk to you all tomorrow. Thanks,
All
Coach.
right. Goodbye.